Let's start by adding the breakout indicator to our chart. I'll demonstrate this scalping trading strategy using the Matic chart with a 5-minute time frame, but feel free to use it on any symbol and time frame you like. The breakout finder indicator helps us spot important breakout areas for trading, but to optimize it, let's adjust some settings. So head over to the indicator settings and in the inputs tab, change the period to 3, max breakout length to 100, and minimum number of tests to 3. In this example, the indicator has identified a breakout by marking a resistance area and displaying a breakout point. It indicates that a breakout has occurred, allowing you to enter a long trade at this candle. And similarly, the indicator has identified a support area in this example and generated a short signal after the support level has broken. However, some signals go against the market trend. For instance, in this example, despite an upward trend, we received a sell signal, which could have led to losses. Additionally, despite a downward market trend, 2 buy signals were generated by the indicator, requiring us to eliminate these signals by identifying the trend. The best solution for easily recognizing the trend, whether for beginners or professionals, is to use moving average exponential or EMA indicator. Next, we need to adjust the indicator. But before that, if you want to use a good broker with the lowest spreads and commissions for trading, you can sign up with the Light Finance Broker through the link I've provided below this video. Keep in mind that we will soon provide you with the capability of free copy trading. Alright, now let's head over to the EMA indicator settings and change the length to 100. Then head over to the Style section and modify the indicator's line color to white and increase the thickness slightly for better visibility on the chart. Now in this example, it's easy to identify and eliminate signals that go against the trend at first glance because the candlesticks are forming above the EMA indicator. And similarly, in this example, due to the candlesticks forming below the EMA indicator, signals in line with the trend are easily recognizable, enabling us to confidently enter a short trade. And to filter out minor market fluctuations, we can use the RSI Histo Entry indicator. So add this indicator from the indicator section of TradingView website. Once added, the indicator will be displayed in the chart like this. Now head over to its settings and use the 4-hour time frame for the indicator time frame. And leave the other options at their default value. Now in the Style section, only need the RSI Histo option, so disable other options. Then change the color of 0 and 1 to green and change the color of 2 and 3 to red. Finally, change the display type to columns. Great, we're done with the settings of this indicator. So if the RSI Histo indicator appears green, it confirms a buy signal, while a red color indicates a sell signal. Using this indicator can easily help filter out signals generated during corrective waves that go against the main market trend. For example, these 2 sell signals in an upward trend are filtered out by the green color of the RSI Histo indicator, and the next buy signal is confirmed. Or consider this sell signal that had confirmation from the moving average exponential indicator but was correctly filtered by the RSI Histo indicator. Alright, now it's time to understand the trading rules of this strategy. So to enter a long trade, you need to follow these 3 steps. First, wait for a breakout in the upward direction. Once the price breakout, move on to the next step. Next, check the RSI histogram indicator to confirm your trade entry. You need to see the indicator showing a green color, which is a positive signal. This confirmation is important before you jump into the trade. And lastly, make sure the price is above the moving average, indicating an upward trend. So if the price consistently stays above the moving average, it adds further support to your trade entry decision. So once you've checked off all these conditions, you can enter the trade at the closing price of the candle. But it's important to manage your trade properly by setting a stop loss level. This means you should identify a level where you'll exit the trade if it moves against you. For long trade, you can use the recent swing low as a reference point for your stop loss level. Additionally, aim for a risk-reward ratio of at least 1 to 1.5, meaning your potential reward should be 1.5 times your risk to ensure a good balance between potential profits and acceptable risk. And also the same rules apply when entering a short trade. First, wait for a breakout in the downward direction. Once the price breaks out, move on to the next step. Next, check the RSI histogram indicator to confirm your trade entry. You want to see the indicator showing a red color, which is a negative signal. This confirmation is important to validate your trade entry. And lastly, make sure the price is below the moving average, indicating a downward trend. If the price consistently stays below the moving average, it adds further support to your decision to enter the short trade. So after you've met these conditions, you can enter the trade at the closing price of the signal candle. Remember to manage your risk effectively by setting the stop loss level. For short trades, you can use the recent swing highs as reference points for your stop loss level. And aim for a minimum risk-reward ratio of 1 to 1.5 when planning your exit strategy to ensure a balanced approach. But if you're not sure where to begin trading and making profits, I strongly suggest watching this recommended video.